Today, crypto markets add to yesterday's rally. CNBC reveals the top states for creating the crypto economy. And Celsius walks through just how much money it owes to creditors. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto markets are adding to yesterday's gains. By noon Eastern, Bitcoin traded at $23,000 and Polkadot traded at around $7. Now let's get you caught up on the top stories. First, crypto exchange Gemini just cut dozens more employees. According to TechCrunch, around 7% of Gemini's workforce was missing from its Slack channel on Monday. The latest round of layoffs came less than 2 months after Gemini cut 10% of its staff in response to falling crypto prices. Next, CNBC just revealed the top states leading crypto innovation, and the winner might surprise you. Nebraska ranked #1 in creating the crypto economy thanks to its access to a variety of energy sources, central location, and crypto-friendly bank charters made it ideal for digital assets. Other top states on the list include Texas, of course, but also Kentucky, Idaho, and Wyoming. You can find the full rankings over at CNBC.com. Celsius just had its first day in bankruptcy court, and lawyers laid out the company's debt and plans to restructure. Celsius owes more than $5 billion to over 500,000 creditors, and the company only had $1.5 billion in holdings before declaring bankruptcy. That's down from $14.5 billion just a few months ago. As for how the company plans to recover, Celsius plans to focus heavily on its crypto mining business, Celsius Mining. That business is still looking to build a facility in Texas. Celsius has gone from a multi-billion-dollar company to bankruptcy in a matter of months. What was once a leading crypto lender made headlines after freezing its customer accounts last month, then essentially went radio silent, with no answers on when customers would get their money back. The company broke that silence last week when it filed for Chapter 11 bankruptcy. Now, for the first time, 2 former employees in leadership roles are speaking out about what they say led to the company's downfall.
Timothy Cradle's career had been about making sure companies followed the rules. So he says he was alarmed by conversations at a Celsius corporate event in late 2019.
There was a bit of an odd thing that came up at one of our Christmas parties.
Cradle, the former director of financial crimes compliance, says top executives were talking about deliberate price movements in the Cell token. The cryptocurrency created and used by Celsius started to spike in early 2020.
I don't know a better way to phrase it, but they were in the market, they were actively trading and increasing the price of the token.
Based on those conversations, you're saying that management was manipulating the price of the Celsius token?
They were absolutely trading the token to manipulate the price.
This echoes claims in a lawsuit alleging the company was actively using customer funds to manipulate crypto asset markets to their benefit. Market manipulation is one of the biggest issues in crypto, and it's one of multiple issues former employees are now speaking out about. Cradle and a former top human resources employee spoke to CNBC about what was a multi-billion-dollar company headquartered in Hoboken, New Jersey. They say its downfall can be traced back to one theme.
The biggest issue was a failure of risk management.
Celsius says it brought in 1.7 million accounts by offering a 17% yield on deposits.
Because we allow it.
The crypto company and its charismatic CEO, Alex Mashinsky, proudly proclaimed banks are not your friends.
If you think of a bank, their job is to extract as much profit out of you as possible.
We reached out directly to Mashinsky and the company for comment and have not heard back. Celsius was one of a handful of crypto companies to halt withdrawals as crypto prices plummeted.
The compliance team was too small. Our resources were too limited.
Why do you think compliance was so understaffed? What was behind that?
Basically, we were sucking out money and not bringing any back in. They didn't want to spend on compliance.
CNBC obtained dozens of internal documents that in part show disorganization. In one instance, a top Celsius executive writes that he's surprised by a document written by another team overseas. Cradle, who left Celsius last summer, also said the company was trading customer funds. The CEO has denied this on Twitter.
Did it seem risky? Yes.
He also says Celsius was putting them in controversial crypto projects without the compliance team's approval. According to this internal document, these investments were clearly labeled as medium or high risk. The state of Vermont echoed this in a recent consumer alert, saying the company deployed customer assets in a variety of risky and illiquid investments and didn't disclose that to customers. Risk-taking was also part of the hiring process, at least at first.
I wasn't background checked, which I thought everybody did that.
Nikki Goodstein, a former senior member of the Human Resources team, says she wasn't aware of any background checks taking place when she joined in May of 2021. In fact, she says executives specifically told the chief human resources officer not to background check Yaron Shalem, the incoming chief financial officer. Months later, he was arrested and charged with money laundering in connection with his previous company. We made an attempt to find out the status of the case, but it does not appear to be public in the Israeli court system.
Everyone was PO'd that he wasn't background checked, because then it wouldn't have brought such embarrassment to the company if that was a process that we had in place.
Goodstein says she's speaking out on behalf of customers who put their trust in Celsius.
I feel really bad for people in the community who put money in there with confidence behind this, and not only did they lose money because the market volatility, but now they can't even get out what they put in to begin with.
In the end, Cradle says Celsius may be just another example of a startup that grew too fast.
It was just a bunch of mistakes that are ending up very tragically.
Many Celsius employees were paid part of their salary in the company's cryptocurrency, the Cell token, and in a lot of cases stored their personal funds on the platform. They still haven't heard when or if they'll see their money again, but legal experts say there's no guarantee. In one section of the terms and conditions, it says once someone deposits their funds, that cryptocurrency belongs to Celsius. That's all for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.